2021 has been a harsh year for Cathie Wood. Yet Cathy currently accepts Ark Invest will produce a normal pace of return of 35 to 40% each year throughout the following 5 years. That is a strong case to make. However, Cathy's conviction is supported by a huge number of elements that are, on the whole, meeting to give the best chance she's consistently seen. Some singular ventures that we will cover can possibly accomplish 8 to 25 times returns in the following 5 years by Cathy's projections. There are various motivations to accept that the market will slump. The new COVID variation is spreading. China's land bubble is languishing. Loan fees might increment and quantitative facilitating is reasonable going to diminish soon. Albeit a portion of these worries have merit for the general financial exchange. Cathy accepts that Ark Invest related stocks are going to encounter the greatest bull run ever. The momentary spread between Ark, which is the Ark Invest Development ETF, and the S&P 500 has started to extend over the previous year. The justification behind this revolves around the issues I referenced before. The most noticeable financial worry of the rundown is expansion. All the more explicitly, the effect that expansion has on financing costs and quantitative facilitating, which is the point at which the Federal Reserve buys bonds. High expansion harms development stocks the most on the grounds that financial backers will need current benefits rather than future benefits. Taken care of, Executive Jerome Powell, as of late, inferred that expansion isn't momentary any longer, which is an indication that loan costs might increment quicker than anticipated. Powell's admonition about expansion ought to have expanded security respects acclimate to new expansion assumptions. This is on the grounds that when expansion expands, expansion changed returns. Otherwise called genuine returns, decline. Accordingly, security yields should increment to keep genuine returns at a comparative level. Basically, the security yield ought to hypothetically increment assuming expansion assumptions do too. Nonetheless, the security market really responded the other way. Cathie Wood considers this market response to be a sign that a gigantic accident is coming at buyer costs. Expansion has remained longer than Cathy expected, and expansion assumptions are as yet expanding at present. The rising buyer costs are principally initiated by an absence of supply, which won't keep going forever. Cathy accepts that customer costs are going to crash drastically once supply chains become overloaded with stock. The security market's contrary response was an indication of the approaching accident in costs. Another element affecting expansion is China. The Chinese economy is beginning to dial back as land designers are neglecting to pay the interest on their obligation installments. The public authorities' expanded guideline has incited the Chinese land crash. Also, when the Chinese economy crashes, products crash too, which causes considerable collapse. I canvassed this theme inside and out in a past video that is connected on the upper right of the screen. Regardless of whether loan costs do build, Cathy accepts that buyer cost will crash, such a lot of that the Federal Reserve should reevaluate their activities. So presently, you may be pondering, how might this affect Ark Invest and the financial exchange at large? The accident in the Ark Invest ETFs in 2021 was started by high expansion, yet on the off chance that what we discussed is valid, then, at that point, Ark Invest is going to encounter one of the biggest bull runs ever. Back in February 2021, Cathy just anticipated 15% yearly returns. However, presently, she sees 35 to 40% yearly gets back from here. This is on the grounds that diminishing valuations compared to higher anticipated future returns, as long as future value targets continue as before. For example, suppose Cathie Wood anticipates that Teladoc should reach $500 per share in 2026. Assuming that Teladoc dropped from $250 to $100 and the $500 value target continued as before, financial backers can expect a 5 times return rather than a 2 times return. This relationship is like how security costs decline when security yields increment. Diminishing valuations for stocks possibly increment future returns, assuming the essentials stay unblemished. Truth be told, Cathie Wood believes Ark's ETF is going to more than 4 times in 5 years. However, there are a couple of stocks that she accepts will return significantly more than that.